A very happy morning, children. So, today's video we are going to discuss about another important source of finance, but not directly. We will go to that particular topic, but via a question. First of all, let us read out the question and then we will deal about that particular source as well as the other factors which we have to keep in mind while choosing an appropriate source of finance. Okay, so let us first read out the question and try to identify what they are asking actually. So let's see. ABC Limited. So I'm stopping you first here. The word is given ABC Limited. Limited word. It means to say it is a company. And one more thing, as we already know, when it is a public company, either it will add the word limited or public limited after its name. So as you can see here, it is written ABC Limited. That means ABC Limited is a public company. Whereas we know that in case of private company, it is compulsory for them to add the word private limited after the name. So here as you can see, only the word limited is written after the name. It means to say it is a public company. Okay, so whenever you are going to find out any source, you have to understand about which type of organizations they are talking, because this will only help us to decide the appropriate source. So from the name only we have identified it is talking about a public company. Okay, so let's move forward. ABC Limited is not having good liquidity position. That means it is not having enough capital in the short term. So what it has done, liquidity position is not good, no good cash right now in the hand, or there is no current sources from where the money can be converted, the amount can be converted easily in cash. So now what to do? It has invested in long term investment projects. Okay, the money will come, but after few years the project are long term. That means it will take 5 years or more than 5 years to convert into cash. So currently the liquidity position is not good, but in future the situation will be better when the investment will be fruitful, and after 5 years or more than 5 years the money will come to the company. Now, and will get smooth cash flow after 5 years. Okay, so as I told you, long term means at least 5 years. After 5 more, if it is more than 5 year or 5 year, it will be counted as long term. So after 5 years the cash will start to come in the company. Now it is not in a position to bear risk of fixed burden of paying interest. Now when we have to pay interest, first of all, when we are taking loan from any of the financial institution like bank or from the capital market, or another thing, if we are issuing debentures, that means if we are taking loan from the public, that time also we have to pay interest. So when we are issuing debentures, when we are taking loan, so in these cases, as well as when we are saying public to deposit their money in our company, that time also we have to pay interest to them. So the condition is not good. So the company cannot bear this particular risk. They cannot pay a fixed interest. So what are the options now? So what they're saying, it is not in a position to bear risk of fixed burden of paying interest. So the company cannot pay proper interest, a fixed interest. Suggest which source of finance is suitable for this company and suggest other factors that are to be kept in mind. So which source is suitable? So first of all, what are the things which we have discarded? We cannot go for loan, we cannot go for debenture, we cannot go for public deposit. That means fixed burden we cannot bear. So what is the solution left? The solution is either we can go for equity shares, because we know that equity shareholders are the owner of the company and they are the main risk bearer. That means what will happen if the company is not earning good profit? So in this situation the company can stop the payment of dividend, because if it is not having a good amount of profit, how can they issue the dividend, how can they pay the dividend to the shareholders? This is next to impossible. So it's okay with the shareholders if they are not getting the dividend, because because they are the owner, they have to bear the risk. So there is one option. either you can issue the equity shares, or the another option is that you can go for retained earning. That means in past years, if the company is having a good amount of profit, and if they have kept it, some part of the profit if they have kept as a reserve, that can be utilized. So in this case, two things are there: either we can go for equity shares, or you can go for retained earning. So one thing is which is stated over here, the liquidity position is not good, so it is preferred to go for equity shares, because if it doesn't have a good amount of cash, so there is a little chance that they will have a retained earning. But still, if they are asking for two sources, we can go for these two. That means either the company can issue the equity shares, because equity shareholders will get the dividend, they will get the share of profit only when the company will earn profit, or as in case of loss, they are not at all allowed to expect anything from the company, because if the company is not earning profit, how can they share the profit? So they are having one option, share issue of equity shares, and another option is retained earning. That means the share of the profit which is kept in the business in form of reserve. So these are the two sources which can be utilized by the ABC Limited. Okay, so these are the two sources of finance. Now, the other part of the question, as you can see here, they are asking, suggest other risk factors that are to be kept in mind. What are the other things we have to keep in mind when we are going to choose a proper source of finance? There are so many sources, as if we have discussed till now: equity shares, retained earning, debentures, public deposit, then trade credit, factoring. So many sources are there. But now the question comes, among all these sources, which is suitable for us? It's not like that always equity shares or retained earning will be suitable. So there are certain things which we have to keep in mind before deciding any particular source of finance. So let us discuss it point wise, one by one. Okay. The first one is financial strength and stability. So how much strength we are having, or how much stable we are. So the first point, financial strength or stability. That means if the financial condition is good, if the business is stable, if we can take the risk of paying the interest at particular time, so it is advisable that we can go for loan or debentures, because if we are having a stable financial position, it will not create a burden. In fact, if we are paying interest, that interest, suppose if we are paying interest on debentures, or in these cases we can go for tax deductions also. So it is better if we are having a good financial position. But the opposite case, that means if our financial position is not good, if it is not stable, then we have to think for another sources. Right now we have discussed about equity shares. Now we have to pay them dividend only when we are earning profit. So if we are not earning profit, if our financial position is not good, we can go for equity shares, we can go for retained earning. So we have to think for the financial condition of the company. Then only we can decide. Okay. So this is the first thing, financial strength and stability. Now go for the second, that is form of organization. Form of organization. That means which type of organization we are having. For example, in case of joint stock company, there is ample scope. We can raise fund from various sources, but all these sources are not available in case of other firms. As if we are discussing about sole proprietorship or partnership, or we are discussing for joint Hindu family business, they do not have the source of raising fund from the issue of equity shares or debentures or public deposit. So we have to first see about which form of organization we are having, and then only we can decide which is the best source of raising fund. So this is the second thing, form of organization, because all the sources are not available to all the forms. Okay, so this is the second thing. Now third thing is purpose and time period. Okay, now this is also very important, purpose and time period. This means to say that for which purpose we need money. For example, if we need money for payment of some day-to-day expenses, so in this case we are not going to take a loan for 5 or 10 years, because when we our purpose is for short term, we should choose a short term source. And if our purpose is for long term, we should go for the long term source. For example, as I have said, that if we have to make the payment of some day to day expenses, it is better you take loan for a few months, or you can go for trade credit. So you have to decide accordingly. And if we want to purchase machinery, or we want to go for expansion, in that case you can take a loan for longer period, you can issue shares, you can issue debentures. So you have to decide what is the purpose and for what time period you need money, and then only we can decide which source of finance is suitable for us. Okay, now next one is risk profile. Okay, so when we are talking about risk profile, if we think that the money which is needed right now, that will be somehow riskier one. For example, if I want to invest in a project which is a risky one, maybe in future I may have to face loss and all, in that case it is better you raise the fund from the issue of shares. And if you think, okay, there is no risk, I am in a good position, I can pay the interest on time, then you go for the debentures or loan. So you have to first think about the risk profile, and then only you can choose the appropriate source. Now the next one is control. Now, this is also one of the interesting thing. Who control the company? Who are the owners of the company? Shareholders. If they do not want to share their control with any other person, in that case, they will not issue further equity shares. So they have to go for other sources. That means we have to decide whether we are ready to share our control, or we don't want to share it with anyone else. I want to keep the control in my hand, I want to take decisions. For example, if you don't want to share the control in you are running a sole proprietorship business, you invest the money alone, no need to appoint a partner who is going to help you out. But similarly, in case of a joint stock company also, if you don't want to share the control with any other person, don't issue any further equity shares. You can go for loan, you can go for debentures. So these are the options available over there. Now, the next one is the tax payment or tax benefit. There are certain sources which will help us in saving the tax. For example, if we are paying interest, that interest will help us to reduce the tax amount. Actually, how it works, when we calculate the revenues, and after calculating the revenues, from there we deduct the expenses, and interest is actually the expenses which we have to deduct from the revenue, then only we can get the profit. So actually how we are getting the profit, revenue minus expenses, that is the profit, and we have to pay the tax on the profit. Now when we are paying interest, that is a kind of expense. So because of this, our profit has been reduced, and as a result we have to pay less tax. But when we are not issuing any type of debentures, or when we are not taking loan, that time no interest we have to pay, and that time our profit will be higher, and that time we have to pay more tax. So this time, if you are issuing, suppose equity shares, so equity shares is in case of equity share we have to pay dividend, and dividend is actually allocation of profit, we are sharing profit. So it will not at all help us to reduce the tax. So we have to first of all plan what do we want to do related to the tax, and then only we can decide an appropriate source of finance. So these are the some of the factors which we have to keep in mind before deciding that which source of finance is suitable for us, and then only after analyzing all these things we can choose the appropriate source of finance. Though there are so many sources, but it is advisable to choose the appropriate source which suits you actually. Okay, so this is the whole concept of this question. I hope it is very clear. Thank you so much. Have a nice day.